Hi everyone, welcome to a brand new episode of the Outlier Podcast. Today being a Wednesday morning, waiting for the long break before Thanksgiving. It's been a wonderful time so far. We've got Jody with us today. Hi Jody, how are you doing, sir?
Very good, Anurag. Nice to be with you on Thanksgiving week.
Absolutely pleasure. I don't think Jody would need an introduction. He's one of the thought leaders, one of the forward thinking leaders in the fintech ecosystem, but still I'll do my thing that I do to start introducing my guest. Jody is president of North America business for Engine by Starling, a very known face in the ecosystem, spent almost close to 7+ years running the business for global banking, for Personalization. An ex-McKinsey partner, spent considerable number of years before McKinsey at global banks such as US Bank, Wells Fargo. Jody, I don't know if I do half enough justice by doing an introduction, but I thought of doing a quick one in 30 seconds by doing half justice. If you want to add something, please feel free.
I think you've done it well. I would maybe leave it as banking is a noble profession, and those of us that are in the banking ecosystem, I think, should be excited about the challenges and opportunities that are in front of us. So I've been pleased to be a small part of it.
Absolutely, Jody. All of us are. Let's start, Jody, with talking about your journey. So we were just chatting before the podcast. Possibly, Jody is the first McKinsey partner I've seen who moved from industry to consulting, from banks to consulting. Usually, the reverse happens. So let's talk about that, Jody. So what has been your background so far? How and what has led to what you do today?
Yeah, thanks, Anurag. My story is, like many others, probably more emergent than planned. But when you retrospectively look back at a career and a journey, you perhaps connect some dots, and it makes you feel better about where you are and what you're trying to accomplish. So now looking back, I can say that I bring three aspects to my journey, my career. One is, as you mentioned, in operating banks as primarily in the digital space, leading firms like US Bank, Citizens Bank. Citizens Bank, I ran the digital and call center, so that was about 1,000 people. It was called Customer Direct. And then previous to that at Wells Fargo. Second part of my career was in consulting, as you said, and most recently at McKinsey, which is, of course, an amazing firm and one that stays with you really for a lifetime. And then thirdly, what I'm most excited about is in the fintech space, where it's incumbent upon fintech players to really advance the industry, the competitiveness of the industry, which I find fascinating, particularly with all the emphasis now on technology advancements.
Absolutely, right. So we are glad to have you today, Jody, firstly, right, to talk about your career, to talk about your journey. So let's start by asking you one question after your background. So the times and situations right now are very unique. Be it macro, be it micro, things are changing so fast. I think half of us are half convinced that we might run into a recession. Be it in this country, I don't know about globally. But what do you think, Jody? It's an interesting time. What are your 2 cents or takes on what is cool in banking and what is there, what's happening?
Yeah. Well, I think it helps to be an optimist. And I would suggest that those of us that are in the banking ecosystem should feel lucky to be part of this era of banking. It is probably one of the most interesting and dynamic times of banking. We literally are at a tipping point, if you will. And it's because of a number of different factors, I would suggest, that are contributing to this fascinating time. So one is, we've got such rapidly evolving customer expectations and demands. They are demanding frictionless interactions, real-time capabilities, personalization, guidance, being able to anticipate issues. So these customer expectations are really rapidly evolving. Second is increasing competitive threats. You have really the super regionals and the nationals that are continuing to gain share, really encroaching on tier 2 and tier 3 markets, putting a lot of pressure on mid-tier banks in particular. And then neobanks. Neobanks like Chime and others are attracting over 40% of new checking accounts open. Then the dramatic advancements in technology. I mean, it's just a whirlwind of advancements. And it's fun to read about, but just put yourself in a situation of a CIO or a chief digital officer deciding, where should I be investing in the medium term, based on the evolution of technology gains. And then, of course, you always have the enhanced regulatory scrutiny and oversight, particularly looking for more granularity in this time where banks really need to be very sharp around resilience, security, and operational stability. And then the last one Anurag, is we're probably entering the most intense and transformative wave of M&A that the banking industry has ever seen. And with many regional banks that are trading below book value, that puts a lot of pressure on particularly mid-tier banks. So all of this together, I think, creates a very exciting opportunity, but one which will clearly separate leaders from laggards.
Absolutely. I mean, just picking on to one of your points on Chimes. Yesterday, an interesting number. It's surprising that Chime accounted for 13.5 or 13% of new checking account for Q3 in the country, and Chase accounted for like close to 9. The 6,000 branches for the largest institution.
Yeah.
That's not able to beat Chime. Now the question is, in terms of regional banks or community financial institution, how difficult is it to actually attract consumers in this age? It's no longer sending direct mails and billboards. Definitely that has we have moved past that, and I'm equally interested or excited, Jody, what has the next couple of quarters looking like. And I'm optimist, like all of us, we are optimists, and let's see where it has to go.
Yeah, that's what makes it such an exciting time in banking. But there's clearly a squeeze, particularly on mid-tier banks. You mentioned Chime's proficiency. You know, their business model is rather unique, and it's been significantly it gained significant traction. It is one where they have a very low customer acquisition cost. Their OPEX per customer is quite low. Of course, the revenue is lower as well, but they're continuing to create and gain what they call kind of the attachment rate, which is the number of products they have per customer. You can see how that's growing as well. And they're targeting customers that are average income of $75,000. They're really targeting the let's say the broad lower 2/3 of the income segment. And then you've got the super regionals and the nationals that are winning in the upper 1/3 of the income bracket. So that creates a real challenge. And, you know, I guess if you pay a consultant $1 million, they'll probably tell you that in this kind of situation, what you should really do is find the sweet spot that you can serve really well, innovate and differentiate for that customer segment, execute and overserve them so that you can win in that market. And so that's let's say a common refrain in terms of what a good strategic outcome would be. The challenge is, how do you execute on something like that? How can you drive the necessary operating efficiency and then take those operating efficiency gains and put them towards innovation and differentiation? How can you unleash the creativity that many banks have? Their people are very creative. They want to do what's best for the customer. They have ideas on how to improve, both from the customer experience as well as in terms of operational efficiency. How do you unleash that creativity and then allow that to really happen and create that kind of that focus and execution that most banks strive to achieve?
Yeah, creating that playbook or identifying that niche and creating that playbook is what I think regionals and below regionals need to find, because you'll never be able to compete even with a Chase. Technology spend of $15 billion every year. That's not even an asset size of one of the largest credit unions or community banks. So you cannot compete at scale, but you can compete at niche. You can compete at what is required. I absolutely get it. So now, Jody, moving on to your new exciting role, right? So you've moved from this role a couple of months back. You've got your first North American customer for Engine. That's interesting, a brand new core, right? So beyond being, cloud native and API first that all codes nowadays talk about, right? So it's a sea of sameness, right? What is Engine's true differentiator that a top 50 bank is actually buying from you guys? I mean, buying is a very wrong word to use, but selecting you or trusting you as a partner to drive transformation.
Yeah, it's such a good question to address. Just a little bit more context here. If you ask what's limiting banks in terms of being able to execute against that strategy we just talked about, in terms of, yes, I want to be able to unleash the creativity of my organization, focus on a segment and win, execute, over-deliver for that segment. It's really the technology estate that banks have today that holds them back. In fact, it's been said that almost 80% of IT spend can go just towards maintaining your core, your legacy core, which really is likely not giving you any points of differentiation or competitive advantage. And as a result, over 2/3 of banks, according to McKinsey now, suggest that some kind of core transformation or upgrade is a top priority. And Anurag, this is a kind of initiative which many banks shied away from before. They call it open heart surgery, and it's always compared very unflatteringly to other kinds of situations you don't want to be in. But now it's really a necessity. And our view is that there's two broad paths one can take. One is you can undertake some kind of a core upgrade, try and limit the amount of impact to your business as a result, address some of the, let's say, reduce the inflexibility that's inherent in most core systems, and address probably some near-term risk issues, risk around operational resilience, security, operational just execution effectiveness. Maybe there's some risk in your legacy core platform. That's an IT-led exercise typically. Pretty modest expectations as well, typically, versus the other side, which is, let's call those bank modernization programs. This is where a bank leadership team, not the CIO, but the entire leadership team, has conviction around a bolder ambition. They have an efficiency target to achieve. They've got a growth agenda to deliver on, a customer experience set of goals that they want to be able to meet, improvements in their risk and controls environment, more dynamic risk controls, and frankly, even a better employee engagement because they're providing more capabilities for their employees to serve customers. Let's call that a bank modernization program. Yeah. It's clearly a different kind of scale, and it's certainly more effort than an IT upgrade. But this is the kind of ambition and conviction that now we're seeing, I'll say, is switched on leadership teams, particularly very dynamic and forward-leaning leadership teams that want to be amongst those leaders rather than stranded in the broad pool of laggards. Frankly, it's those institutions that really enjoy winning and being ahead. Yep. And winning the battle for customers that are likely going to take more of a bank modernization rather than a core upgrade. And that's really how we're positioning Engine, is to be an enabler around bank modernization.
Absolutely. And at table stakes right now, before you talk about bank modernization, it's a journey, not about just core, but looking onto your digital experiences, customer experience, customer journeys. How can you reimagine customer journeys? So an interesting number I read somewhere was quoted by Financial Brand in one of the articles. 56% of any banks, it's a dated number, 2 years back, it's looking for a new core every single time. Right? That's an actual number. And I'm sure I hate to use the word AI because I'm a data scientist myself. I don't call myself an AI scientist. I'm still data science. So with AI coming in and with experiences being reimagined, I'm sure this number has shot from 56 to 70 right now, because everyone I talk wants to talk about what next. My core is not flexible enough to do A, B, and C. So what you're doing right now, Jody, this is exactly what the ecosystem needs, right? So very well timed. I think your move to Engine is very well timed, and I think you'll have amazing success helping financial institutions, banks, credit unions walk this journey and path of modernization, right? So let's see. I wish you all the best.
Yeah, no, we're very excited about it. I'll also leave you with that. There's three elements really of the positioning that I think are worthwhile to convey. The first, as we just mentioned, as part of a bank modernization program, typically banks will have a balanced scorecard of outcomes: an efficiency target, a growth agenda, customer experience improvements in their risk and controls environment. And those outcomes is what we're trying to help enable through the modern technology platform. It's not about the modern technology platform or modern core. It's about driving these outcomes. So that's one. The second is this connected employee and customer experience, more than just a dynamic front-end experience for customers, but one of the things that we think is very powerful is this single pane of glass that every employee in the bank, whether you're an executive or a head of deposit products trying to configure new products, or a compliance person considering AML alerts and rules to address them, or a call center agent trying to better serve customers, all engaging through this unified view of the customer data. And the last one, which you just articulately laid out, is being digital and AI ready. With AI moving so quickly, there's not a set of standard use cases that someone can say, okay, this is the best set of applied analytics and generative AI solutions and agentic AI solutions. You really need a technology stack and a platform, and particularly a unified data model that'll allow you to employ and apply these new practices in a way that allows them to be trained quickly, the models to be trained quickly, and then to be able to scale. So that's the advantage of having a much more modern platform and tech stack. It's the ability to really be agile regardless of how technologies and use cases are evolving, and allowing you as a bank to be able to employ them and employ them at scale and frankly not miss out.
So, Jody, the next question is, how do you shorten the typical 3 to 5 year core transformation timeline, right? And what's a realistic win that you have, you think, in the first 90 to 180 days?
It's an important topic because with so many banks looking at core transformation, core upgrade, and hearing of so many issues around prolonged and exaggerated implementation paths, it's important to be able to have a point of view that will work for an organization in terms of where they are in their journey, their transformation journey, and one where they have a high confidence of execution. Oftentimes the thing that holds banks back from acting is not so much the upside opportunity. It's the fact that they don't have the confidence necessarily around the implementation journey or the level of risk that you may be undertaking there. And we've heard about many of these multi-year journeys. So what we found to be effective, and the couple of clients that Engine has deployed have been all inside of 12 months in terms of going live. And this is the full tech stack from core to the digital front end to workflows, CRM, product configuration, AML and fin crimes. So it's a full tech stack to be able to do that. Now you can do that more effectively when initially you're focused on delivering it for new customers. So this is typically an exercise that many banks will want to consider, which is what's the appropriate logic in terms of how you might implement from a sequencing, phasing, scoping standpoint. And you're balancing multiple factors here. You're balancing the desire to be able to get something out more rapidly, to be able to then leverage it, to extend it for the rest of the organization, to build some early momentum, and also mitigate the risk. So we found that focusing on acquiring new customers through the new platform, perhaps adopting at least some degree of coexistence as that's happening, and then initiating the migration of current customers. Now, migration itself is also a really fascinating topic, and one which, again, can draw real concerns because there's risk associated with migration, there's attrition risk. I found actually that it's better to set higher ambition for migration. In fact, not even call it migration per se, the tactical aspects of migration, but more in terms of if you have an opportunity to interact with customers, how can you make the entire exercise a relationship deepening one? That means that they need to be highly motivated around what's in it for them around this new platform. So it needs to be much more than just we're upgrading our technology to make it more secure or make it more compliant or make it more operationally resilient. I mean, clients aren't going to get super excited about that. So what is the motivating aspect that for a client where as part of this transition, they may be able to get into a better product, or they may be able to save more or take advantage of more of the capabilities of the platform or see some new experiences. So it's a fascinating exercise, of course, that goes well beyond technical. It comes into strategic scoping, business case, communications, customer engagement, awareness, and of course the technical feasibility and execution part as well. So it's a complicated question, but one which I think with important for organizations to diagnose in terms of how do you make sure that you're mitigating the risk while also creating initial early momentum and then leveraging those learnings for expansion through the enterprise.
That's a very well rounded answer. I mean, I don't have a follow up question to it, but again, in terms of, I mean, I'm a huge fan of execution, right? I mean, the day one, right? I mean, the day one, day two, day seven. So, how does Engine enable on a day, I mean, one in terms of data activation and personalization that core legacy I would say legacy cores, right? I mean, I'm not naming people, cannot, right? So
Yeah.
what is the differentiator?
I mean, there's so many limitations around the legacy core, right? I mean, starting just with risk, operational risk, resiliency risk, stability, which we're seeing. Of course, the ability to create expertise that is knowledgeable with these old cores. And when you get these, even the upgrades to with some of the legacy providers, yes, they've got an upgrade path to a more modern tech stack, one that has API orchestration and services exposed, but it's not cloud native. And there's distinct advantages of having cloud native capability. Distinct advantage in terms of scalability, security, and resilience, and the cost advantages that come from that. So there's a difference between those two approaches. The ability really to create value early, again, is something that is a very important consideration. What we've seen our clients do in the initial stages are first identifying what is the the appropriate tech state that will allow them to deliver the kinds of experiences they're looking for customers. So it may not be a complete replacement of your core plus several other systems. It may be where you're hollowing out the core. For instance, you're taking out key aspects of it, key capabilities. You're removing the pricing, you're removing the product configuration. So there's many institutions that are taking that tactic as well. So the right execution approach really needs to be highly tailored for the organization in terms of where are the limiting factors of your current enterprise tech state. What are the areas where you will need to individually modernize those systems, thereby being very costly? And where can you replace that with frankly, a more coherent tech stack that allows you to really gain efficiencies, for instance, around cost to serve, improved experiences, the ability to deploy AI solutions more rapidly. So it's a challenging problem for banks to consider, but one which has immense opportunity and is also very impactful for their future to be able to execute on it well.
Understand. Maybe one question, since Engine is expanding to the North American market. It's quite an ambitious aim objective because there are a lot of existing players in the ecosystem. It's a very crowded ecosystem, but still you guys are doing it, and you're audacious and ambitious to do that. So it's a part of a bank, right? How do you translate Starling's regulated bank credibility, because it's a credible thing, it's not just out of a thin air fintech that started yesterday, into having actual and real confidence for global regulators evaluating a new core? Because what you're doing in Europe versus what you're doing in North America,
Yeah.
these are two different animals altogether. So
Yeah.
how do you remain this?
Well, one of the things that attracted me to Engine is it is truly a bank plus tech offering.
Yeah.
And I like to at least think of my skills as also in the bank plus tech space. So what's unique about that? We have an operating bank, Starling Bank, which has 4.5 million customers, 10% SMB share, and almost 5% consumer share in the UK market. We have an operating bank that has an executive team and resources that are already capitalizing on this capability. So what's really powerful, Anurag, is when we engage with prospects and potential partners, and we engage them not just in terms of the technical capabilities, but introduce them to the head of retail, the head of call center, and they engage directly with their counterparts. And the head of compliance, they engage directly with their counterparts in terms of how can you leverage this capability and achieve the kinds of desired functional outcomes. So it's a very powerful experience when you can bring both the operating expertise and the technology capability. And it comes back full circle to this idea about modernization. Remember, modernization means the full management team has conviction and accountability around doing this. And so each person, not just the CIO, but every individual needs to feel that conviction around how are they going to achieve the kinds of outcomes that are desired. Those outcomes could be, we've got a target around OPEX, per customer. We've got a target around improving our customer experience. We want to be able to deliver new products into the marketplace within 2 sprint cycles as opposed to 1 year plus. Those are the kinds of outcomes that the functional owners will need to drive, or it could be around from a compliance perspective. We want to have better self-assessment, more dynamic risk controls to be able to mitigate against things like new topologies around AML fraud. So these are the kinds of things where having an operating bank like Starling, just as an example, Starling publicly, I can share this, OPEX per customer is around $70. Now, if you take a typical regional bank in the US, they may be closer to around $400. Now, let's say not there's some different dynamics there. Let's say not all of that can be captured. But if you can help a bank say, look, I think there's $50 of OPEX savings per customer for you by leveraging this kind of capability. And here's the kind of workflows that you can introduce into your service to drive first contact resolution and get this kind of OPEX per customer gain. And let's say a bank has 500,000 customers. Well, that's the money, that $50 times the 500,000 customers. Now, this is the money that you can redeploy into revenue, into that innovating, differentiating, creating differentiated experiences for this target segment. Yeah. So you can see how the synergies exist in terms of the technology, the operating capabilities of an existing bank, and how it can be deployed towards achieving a multitude of what I call balanced scorecard outcomes, which is efficiency, growth, customer experience, improved regulatory controls environment, and even employee engagement.
I think this resonates very strongly because of two reasons. One is quantifying OPEX savings as an example. I mean, having a North Star metric is very important. Talk about digital transformation because half of digital transformations just stay on decks and pages and do not make onto the real life. That's one you touched upon. And second, when you already talk to colleagues who are chief retail officers or chief credit officers, chief banking officers in an existing bank, you don't feel like you're being sold and you're actually not selling. You're adding value because you're sharing experiences from a setup in A from a setup to B. It's just conversation and sharing experiences about how has this ecosystem helped a full-fledged bank in the UK drive this amount of transformation. Right? So that's a very powerful statement, and I believe you chose the next part of your career very wisely. And I would say all the best, Jody, for whatever you do over there. Right? I mean, we are always there.
Yeah, no, I appreciate that. One other thing I'll share is that, and you touched on this, which is our landmark partnership with Tangerine, which is a 10-year agreement. And what I want to just applaud the Tangerine leadership because they did a very extensive exercise around this. In fact, comically, since I joined the company 3 months ago, I think their leadership team understands the product much better than I do, which is the level of depth that they've gone through for the last several months. But it's what I applaud there is that here's a bank which, by the way, they have 2.2 million customers. They're a wholly owned subsidiary of Scotiabank, one of the leading digital banks, the largest digital bank in Canada. And they've won the JD Power for mid-sized banks 14 years in a row. And still, they have chosen to undertake this bank modernization effort to be able to create differentiated and personalized experiences for their customers and drive a different degree of operating efficiency and compliance effectiveness throughout the platform to be able to enable them to do that. And in fact, they even see the opportunity around creating somewhat of a cultural change or an enablement because you're helping your employees better serve customers with more effective tools, not having to navigate through multiple platforms, that you can achieve better customer outcomes and, frankly, better employee outcomes as well. And so here's an example of a bank with amazing leadership team, an amazing leader, Terry Lee Weeks, who's probably one of the most prominent banking executives in Canada, who are taking a bold step and have a strong ambition. So it's typically the banks that are better performing, that are leading in some way. They like the idea about leading, so they want to get further ahead. And that's those, of course, are the kinds of customers we're looking for and are delighted to be in that partnership.
Testament, Jody, at what Engine stands today, and I wish the entire team all the best. And thank you, Jody, for taking your time out today to catch up with us and do this podcast. It was fun.
Thank you, Anurag. I appreciate it.